The Federal Reserve boosted interest rates a half percentage point today, signaling its intent to curb inflation, which has sent prices climbing at their fastest pace in 40 years for months now. It was the Fed's biggest move since 2000. Here to talk about the impact on your house or car purchase or your investments is Jamie Cox. He is the managing partner of the Harris Financial Group. Jamie, welcome as always.
Thanks, Bill. You know, the last time I was here was a month before the pandemic hit. So I'm glad to be back in studio. This is actually
well, we should probably check the tape because maybe you said interest rates will stay low forever.
Well, not forever, but for a very long time.
They did. But so the Fed tells us they're really concerned about inflation from supply chain issues, both from the pandemic and now in China. You have the COVID lockdowns, you got the Russian invasion of Ukraine, and of course the super hot labor market. How is this going to cool down inflation?
Well, the Federal Reserve has two tools in which it increases the money supply when things are bad to be able to lower interest rates to make credit available for everybody to buy houses. And right now that is a problem because they created so much money. Now they have to mop it up somehow because demand has returned because the pandemic is waning and consumer demand is rising because people didn't really have a lot to spend money on during the pandemic.
And so all that federal money.
Exactly.
And
there was stimulus and all that kind of thing. So the Fed has this undaunting task of unwinding almost $9 trillion of stimulus. That's a big, big undertaking. So they have two policy tools. One is to increase interest rates, which is what they did today. In addition, they have to roll back some of that money that was awashed into the economy. And they do that by reducing their balance sheet. Today, Chairman Powell said we raised interest rates by 50 basis points, and they're going to do so probably two more times, maybe in June and again, maybe in August.
Well, so tell me, when is it going to hit me on my credit card, or if I'm going to go get a mortgage or buy a car? How long until, what does this half point mean until it hits me there?
Typically, when interest rates rise, banks will have a corresponding increase in the prime rate for your savings accounts and things like that. Banks have been very slow to be able to raise rates because they have so much cash that they don't want it. So they don't give you any extra in your savings account. So consumers should not look to see that happening for a little bit longer. But what it will do is it makes things cost more, like mortgages, credit card interest rates. Those will immediately be affected by the decrease both in the availability of credit. So you can see that happening right now.
Well, and we have a graphic for the historical trend. At least this is the last 20 years. Now, that is like 1980 there towards the left side, just in 1970, I think. You see 1980 is where the spikes are, almost 20%. It's just crazy. So you see all the way to the right side there, that little point up is our half-point raise. So historically, or at least near recent history, not super high, but nonetheless, why did Wall Street react with such euphoria today? I mean, the market kind of went crazy up.
The markets have been concerned that the Fed is going to make a policy mistake by raising rates too fast, and it will basically torpedo what people consider to be a nascent recovery in the economy. And so a 75 basis point hike would almost be like an emergency brake, where the Fed is really going to, basically raise interest rates too high, collapse demand, and then we go into a recession.
And it's that different than a 50 basis point
It's
hike.
a major difference because you string a couple of these things together and all of a sudden you're not going to 1% or 2, you're going to 3, 4, and 5. And markets have been all over the place trying to figure out and divine what the Fed is going to do. But what they haven't done over the last 3 months is actually listen to what both the Fed presidents have said in commentary and in speeches, and also what the chair has said. We're going to do 50. We're probably going to do it for a couple of months. And today he basically lived up to what he said by raising exactly 50 basis points, and markets said, okay, now we believe you, and now we can buy again.
And now we can have the party continue.